There hasn't been a lot of talk lately about climate policy in the sense, it used to be, I think even a year ago, everybody was geared up in the fall for COPs. The That just seems to have been deflated since Trump took office on January 20th. But the truth is that behind the scenes, nations are still working on carbon pricing and other kind of climate policies to reduce emissions. And the that introduces an element of risk for Canadian exports, does it not?
Sure, absolutely. I mean, you've got the carbon border adjustment mechanism and the methane regulations in the EU, both of which would directly affect Canadian exports to that trade bloc based on carbon content of goods. The UK has announced they're going to put in place a CBAM. Australia has recommended that the Carbon Leakage Commission review in Australia has recommended a similar CBAM. You've got carbon pricing popping up in places you wouldn't have expected it before, in Brazil, in Turkey, strengthened carbon pricing in China. And all of those actually have explicitly considered the need for carbon border adjustment as they strengthen those regimes, like very explicit. So you're starting to see this expansion of carbon pricing as a way to deal with climate change, even though the U.S. policy is retrograde in this respect. Everybody else is still moving, right? And you're starting to see some concern for what that means to the competitive position of industrial goods, resulting in these kinds of considerations of trade measures at the border. All of which means that Canada's exporters have to worry about the carbon content of their exported goods.
Speaking of worrying about carbon content of exported goods, I find it very curious that Canada is in the throes of this debate over whether we should build one more pipeline to Prince Rupert, maybe another one to Churchill, and another one out east. And this idea of carbon competitiveness and the fact that the very markets that we want to or expect to be able to export oil to are moving in this direction. And from my point of view, it's as a risk management exercise. If you were a business, you would want to know if you're introducing a new product, you would want to know what your risks are in that market. And this is completely absent from our national conversation. Any insights?
I would say it's absent. I mean, you note that when Carney talks about getting more oil to Tidewater on the West Coast, he talks about getting decarbonized oil as a new export product. But it's not clear what that means. The risk is that what that means is that we're going to sink tens of billions of dollars of public money into carbon capture and storage to allow us to claim a lower GHG footprint for that oil as it gets exported. I mean, that's a risk, and that's a whole other topic of conversation. But yes, I think we are more or less ignoring the trend in consideration of carbon as an important element in traded goods when we think about the future of oil exports from Canada and gas exports from Canada. We're ignoring those trends, and to our peril. But again, if I wanted to talk about what might be a topic of future conversation, I think probably the actual the demand in those markets is as a bigger risk.
Yeah, and I think we've addressed that several times in various news stories because China, the International Energy Agency, in its most recent oil market report, is now forecasting peak oil demand in China in 2025, this year,
Right. Yes.
next year at the latest.
Yeah. Yeah.
And the idea here, just to explain for our viewers, is that petrochemical demand is going to rise by about 1 million barrels a day, but transportation, because it's being electrified so quickly, is going to fall, and they basically cancel each other out. So instead of the growth that OPEC and others are expecting, it'll be flat to 2030, and then it's expected to decline after that, correct?
That's right. And then it's just a question of how steeply it declines. And so if you look at the constituents of oil demand, the reason that transport part is important, over 40% of global crude goes into road transport, for gasoline or diesel for road transport. So if you can invent a vehicle which is a better product and doesn't use gas anymore, then you've threatened to absolutely destroy that huge element of demand for crude. And guess what? The Chinese have perfected such a vehicle. They're currently working on solid state batteries that have over 1,000 miles, not kilometers, of range and can charge in about 15 minutes, expecting to put them into production by 2027. Well, that destroys the current psychological obstacles to uptake of electric vehicles if we can ever get them in Canada. And they will eventually get here. That technology will get here. You can't hold back the tide. Right? We're not King Canute. We are King Canute. We can't hold back the tide.
Exactly right. And really, the question of demand in other countries, whether or not it's there, it gets back into this idea of risk. And so we have, I think, earlier in this interview, we talked about the risk from emissions and carbon tax at the border in various countries where we either do trade or want to trade. And then when you throw in demand risk on top of it, things are getting, I mean, that's a lot of risk that we are not considering.
It is, and I mean, you throw on top, throw on top of that the idea that geopolitical tensions and policy uncertainty are peaking, and don't show any signs of receding. You know, I think the kind of geopolitical risk and policy uncertainty that we're facing today feels like a new normal. Right, and you add on top of that the kinds of uncertainty given by increasing natural disasters, all of which affect the infrastructure and productive capabilities of the oil and gas sector, and the uncertainties like the next pandemic. Because don't forget, we're being warned by all the people who actually know that wasn't the last pandemic and what that does to demand. These kinds of increasing uncertainties feel like the new normal, and that's really bad for business.
Well, let's finish up the interview this way, Aaron, because you're an economist. It's very common in oil markets, for example, to price in risk premiums. You know, like when the U.S. bombed Iran, right away the price of oil jumped, and then it settled down. And analysts talked about, oh well, we investors now think that the chance of a war between Iran and the U.S. is nil, and so that risk premium disappeared out of the price. So if markets price in risk all the time by adding premiums, it's odd that in an exporting country like Canada would not pay more attention to that.
I mean, I'm sure we are paying attention to it, but the problem is, you talk to any trader these days, and they don't know. They don't know what to price. They don't know what's going to come out of the U.S. administration tomorrow, much less next year. And the kinds of decisions, the investment decisions they're making, depend on policy certainty going out years, in some cases decades. So there's always been the need to price risk and uncertainty, but we're in an era of unprecedented risk and uncertainty, and the markets don't know how to deal with it.
Well, I'm going to push back a little bit on this, Aaron, because I think there may be people in the industry and operating in oil and gas markets that are pricing in risk, but there's no indication in the public discourse around pipelines and exports that we are facing risk.
Yes. Okay. Yeah. In which case, I absolutely agree with you. If we're talking about nominating projects of national interest that include new infrastructure that should have decades-long lifespan in order to pay back the kinds of capital expenses we're talking about. So, if we're talking about building new pipelines, I don't hear within those conversations any consideration of the fact that those things may become stranded assets. They may not pay for themselves over the long term because of the kinds of risk we're facing going out to the future. I don't hear that as part of the public discourse. You're right.
Yes, on that we agree. Aaron, thank you very much. It's been fascinating, and we're going to be coming back to you in the future for more about this, because this issue is not going away.
No, it's not. So thanks. A pleasure as always.